The question if ethical banks are viable, are possible, depends at least on two factors. One, of course, is the mental infrastructure and our ideas and values, and thus preferences as consumers or investors, as economic citizens, and maybe to an even higher degree, I think it depends on the legal infrastructure and on the legal framework of the economy. As long as banks too big to fail are legal, as long as our tax havens are legal, as long as high-frequency trade and shadow banks and vulture funds and all these phenomena are legal, we will have a very hard life. And there is already a global alliance for banking on values. It exists because there are some of us who are very smart and who are willing to pay a bit more for more ethical products. And maybe we are becoming more, but we're becoming from 0.1% to 1%, or becoming from 1% to 2%. But if you want to become more than 50% or 90%, I think for this it's essential that also the legal infrastructure and the legal framework changes. This is a short list of a much longer list of phenomenon that if people had the choice in any democratic country, do you want these phenomena to be legal? I can't imagine that in a single country a majority of the citizens would say, yes, of course, we should have vulture funds because that's part of economic liberty. Yes, of course, we should have high-frequency trade because that's part of economic liberty. I can't imagine. And I will tell you later, we have done first empiric research that people would not allow any of these much longer list of phenomenon which we are having to deal with on a daily basis. Because although there is the European Parliament and Sven is participating, I think, in 37 regulatory endeavors, none of these phenomena have disappeared. Maybe they have weakened, maybe they have improved, maybe they have become smaller or less harmful, but as far as I know, none of them has disappeared. And there are two big explanations. One is the power relations within a democracy, which by political scientists, I'm also a political scientist, is called post-democracy, by Colin Crouch. You might have heard it. Formally, all elements of constituting elements of a democracy are there. We vote for political parties, they form governments and parliaments, and there are constitutional courts in some countries that watch over the constitutions, and there's a federal president who has a veto in order to prevent the biggest harm by parliaments or governments. But the essence of democracy, that the people's will is implemented or materialized in laws and other legislative acts, is weakened. And in more and more cases, parliaments and governments decide something different, and in more and more cases, the exact opposite of what people would decide if they had the choice. If people had the choice, I don't know if they would, but I guess they would tendentially, instead of voting for these free markets, supported, by the way, by neoclassical economic science, which says that markets function the best the least they are regulated. That's called the efficient market hypothesis, and it already starts with an illusion. It starts with the illusion that markets are something else than the state, are different from the state, and that there is the choice that the state regulates market or doesn't regulate markets. And then if they are not regulated, they are free markets. And already this is an illusion, because if you look a bit closer at markets, what are markets actually? And all of the fundamental elements of markets are state decisions and elements. A protection of private property. Who does it? The state. Private law, contracts, a credit contract protected by the state, the license for the bank given by a state authority, money issued at least partly by the state, And then come all the other regulations, again, from the state. So what should be a free market? A free market that deserves that name is out of the state of law, is in the jungle. So if somebody talks to you about the free market, please ask this person to show you where, in which country exists a free market. That person won't be able to give you an example. Okay, but still, there is the efficient market hypothesis. There's a Nobel Prize for economics for efficient market hypothesis for Eugene Farmer, although the Nobel Prize for economics does not exist either. Did you know that? There's a Nobel Memorial Prize, which is called like that against the will of the heirs of Alfred Nobel, who are still today publishing in Swedish newspapers, please don't use the name of our grandfather, because he did not give a Nobel Prize to economics, and he would have never given, because he gave the Nobel Prize exclusively to natural sciences, but explicitly and consciously not to social sciences. And economics is a social sciences. We are not talking about natural phenomenon, we're talking about social phenomenon, socially constructed, ideally democratically decided designs of markets. And even though the Swedish Riksbank used and abused, we have to say they abused the name of Alfred Nobel for the Nobel Memorial Prize for economics. If you want a different paradigm, it's hard to get the support from mainstream economics. That's why I made this little excursion. So if you want a different design for the financial and monetary system, and if you want ethical banks, maybe we should rely more on the support of citizens than on mainstream economists. Of course, there are more and more heterodox economists who do not share the neoclassical mainstream, but we need at least the support and the participation of citizens. And this is a modest proposal of a different paradigm than the paradigm of free markets who regulate themselves. The proposal is that we could consider money as a public good. What could that mean? Three things. First, the rules are made democratically because parliaments and governments, they deal with these problems and they regulate the financial markets, and they regulate the banking sector with a big number of regulations, but they don't eliminate the problems with these regulations. Second, money is a means. It's not a goal for which we strive in economy, it's a means. And the goal for which we could strive in economy could be the common good. This might be an inversion of goal and means. And I'm following Aristotle with this. Aristotle, 2,300 years ago, he made us the favor to distinguish between two different ways to understand and to practice the economy. And one way to practice the economy, he called oikonomia. He was the second Greek philosopher who used the term oikonomia in his writings. And he said, in a true oikonomia, oikos, the house, nomos, the moral rules thanks to which we organize and we manage the house in order to achieve the goal of the oikonomia. The goal is the well-being of all household members, the common good. And money is just the means to achieve the goal, the common good. And if this relation is inverted, if money making becomes the goal, the purpose of our economic activity, then this by definition is not economy anymore, but its opposition, which he called krematistike. Krematistike in ancient Greek, the art of making money and get rich. Today we call it capitalism, because yeah, I'm a linguist too. Watch out, be aware of all isms, because that what is in front of the ism is the highest value in this system, and in capitalism, capital is the highest value, a more important value than everything else, from human dignity to a stable global climate, and the increase of capital is the highest goal. And Aristotle said this is not an economy by definition, this is its opposition, it's capitalism. But capitalism is perverted. That what Aristotle said, I don't say it's perverted, I say it's inverted. Maybe the microphone is falling out now. This is Krematistik, or capitalism. It works. That's not a question of it works or if it doesn't work. Maybe it doesn't work for everybody. And this is oikonomia, which works, I hope, for more people and for a longer time. And the new paradigm is actually based on a literal ancient Greek economy, different from capitalism or Krematistik. And as long as parliaments and governments are not willing to redesign and organize a transition from a crematistic and capitalistic financial and monetary system to an economic financial and monetary system, I think we need to engage ourselves. Who are we? We, the sovereign citizens of democratic countries. Is Belgium a democratic country? Austria is a democratic country, but the sovereign consciousness among Austrian citizens is quite weak still. So I think we have to work the next 10 to 20 years on the sovereign consciousness of Austrian citizens until they have seen that in the first municipalities, communities, cities, regions have taken place sovereign assemblies with the explicit goal to rewrite constitutional texts, to tame the financial markets and the financial system of today. Oh my God, what is that kind of letter? I'm shocked because that's not my letter. I'm a bit shocked because I don't know what happened. I'm using Arial. Let's pass it quickly over because it gives me a very strange association with oh my God, what happened there? It's okay. If we take the term of sovereignty literally, and again I'm talking as a political scientist, I studied political sciences and I was taught that the principle of sovereignty is one of the core principles of democracy. And it has nothing to do with nationality or the nation. It has a completely different meaning, but nobody told me the meaning. The literal meaning of sovereign is to stand above all. Just to stand above all. That's all. It's the whole meaning. It already existed in a monarchy. In a monarchy, who is the highest instance? And in democracy, who is the highest instance in democracy? The citizens, yes. Somehow we intuitively we know it or we dream of it, but have you ever felt this? Have you ever felt this in your body, in your cells? What would be the consequence if the citizens in a democratic country were the highest instance? Well, everybody else would be below. And we could write the constitution, change it, give power to the parliament, give power to the government, decide an international law, just for instance, CETA or TTIP, or a single law on money issuance, just for instance, or on the size of banks, just for instance. And we have developed a concrete procedure how the monetary part of the constitutions and later on in the European Treaty and in the Treaty of the Functioning of the European Union could be reformed directly by the citizens. Assemblies from the local level to the regional level to the national level to the European level. And these assemblies would take between half a year and a whole year. And in the end, we have answers on 10 questions. Which questions? The most fundamental, the most relevant questions. And one of the results will be that only ethical banks will be viable. Only ethical banks will exist, will be competitive, will have a life. And banks too big to fail would not exist. Shadow banks would not exist. Investment banks that make a lot of odd things could not do these things. And maybe we would not have at all banks that are profit-oriented. Why do I dare to say this? Because I wrote a book on money, The New Rules of the Game, and a student from a university made her small thesis out of it, and she asked 150 European citizens. That's not a very large number, but it's a first number, and it was representative And the result was that citizens would design fundamentally differently each and every of these cornerstones of the monetary and financial system than have today designed and decided our parliaments and governments. And I think that this is a very important message and fact that probably citizens would create a different financial and monetary system. And now I'm going to the core of my of what I was asked to talk about, which are more ethical banks. And I think to start this issue is first creating a fairer competitive environment, which means that the same rules should apply for all players. As long as there exist banks that are too big to fail, the same rules do not apply to all players, because some are more equal than others. And that's why my first question would be, shall we allow banks to be too big to fail, in the meaning that it is not excluded that taxpayers' money is used to either rescue them or support them? The European directive would have to exclude, would have to forbid, to prohibit that taxpayers' money is used for the rescue of banks. That's not the case. The directive of the European Union says that, well, we have to engage shareholders or owners more than we did in the past, and we have to engage creditors more than we have in the past. But, well, then, if that's not sufficient in the last instance, we might also include taxpayers. And in the first case, it was the case in Italy with Monte dei Paschi. So another example of an extremely flawed, and what was said in 2009? In 2009 was said, never again, we should use taxpayers' money to rescue banks that are too big to fail. If you're serious, we have to eliminate the problem of too big to fail. We have to eliminate banks that are too big to fail and make all banks small enough to fail, with the guarantee that every, at least private bank, can go to insolvency in any moment without bearing a risk for the financial stability. Before that happened, I proposed intuitively, well, I would not regulate by the European Banking Union banks that have actives more than $30 billion, or euros in this case. I would prohibit them. That's my modest proposal. Is it an exotic proposal? Today I'm sure it would meet the majoritarian support of the citizens. It's, so I would give between 10 and 20 years the banks that have a larger balance sheet to reduce it step by step. Give them 10 years, give them 20 years, but don't allow them to be bigger than 30 billion, or we will see, maybe the threshold will be 50 billion, and I'm still fine with it. But it shall not be unlimited. That's the point. And then, can we define ethical banking? And I have 3 more minutes. Of course, I could now describe our project, but I'm a luckier person since the end of 2016, because for the first time, as far as I know, in history of states of law, a national law gives us a definition of what is an ethical bank. That's extremely important, because only if you have a legal definition of what an ethical bank is, we can then support these ethical banks and treat them differently than other banks, the profit-oriented banks. It's the Italian budget law from end of 2016, and the criteria are not exactly the same, but more or less the same. And that's no coincidence, but it's a joyful fact. Common good orientation, I make a tiny jump to the common good balance sheet, and there are already first banks that do their common good balance sheet. No distribution of profits to the owners, because banking is not a business like others, it's a public service. although provided by private banks. No problem with private banks. But money is a delicate issue, and it should not be treated in the same way as other services. Financial services are special services, and the providers of financial services should not profit-oriented, but ethically oriented, common good oriented. No speculations. I think this is clear, although we have to go into detail. Then, very important. Maybe that's the second most important point. Economists today, when do they regard an investment as successful? When it generates a return on investment. And is it a spiritual return on investment? Is it it's a financial return on investment. And if the financial return on investment is double digit, do they say, watch out, it's becoming dangerous? Or do they, say, great, it's a double-digit return on financial return on investment? Now it's my question as a non-economist, or as a true economist. Does a double-digit return on investment tell us anything reliable of the impact, of the effect of that very investment on the environment, on the global climate, on the social cohesion, distribution, human dignity, gender relation, or democracy? Nothing at all. It might even occur that a double-digit financial return on investment project diminishes all these fundamental values and expropriates these common goods and makes society poorer. Doesn't contribute to the wealth of the nation, but to the poverty of the nation. And economists, actually we're talking about pragmatists disguised as economists, consider that investment as successful. Isn't that perverted? Solution, make first the more important creditworthiness assessment, because looking at the resources is not a bad idea. That's very important information, but it's not the most important information. The most important information is how this project contributes to the goals and values of a democratic society. That's why we check first its consequences on our fundamental values and common goods. And only if nothing is damaged, only if that evaluation is not negative, only then we make the financial creditworthiness assessment, and if both are passed, the money flows. And it flows under the better conditions, the higher the added social and ecological value of the project is, which we measure with the ethical creditworthiness assessment. Okay. Maybe I close now. I close. With the Italian law says that the inequality between the highest wages and lowest wages within the bank must not exceed 5 times. 5 times. Do you know what's the highest inequality in Germany at the moment? 8,500 times. And in the US, 360,000 times. And of course, it's a hedge fund manager. Okay, so how do I close? I close with the Bavarian Constitution. No, sorry, can I ask for a last minute? This, so once we have a legal definition for ethical banking, we have some examples of ethical banks. And what do we do with those who are not? Paradoxical intervention, we release them to the free markets, which means we free them of any public support. And this will have a strong impact on profit-oriented bank, because we will not prohibit profit-oriented bank in the first step, maybe in a second step, and for that I will give an argument from the Bavarian Constitution, but in the first step it's sufficient to welcome them to the really free markets, and look what they will lose. They will lose probably their viability. And is this excessive? Yeah, very important. The small ones, the ethical ones, regulate them in a lower degree than the big ones. That's very important, because otherwise we are strongly regulated. There is a tendency to extinguish all small regional and ethical banks, regulating them in the same way as the big ones. Of course, this is equal treatment. This is non-demonstration. But if you treat equally the flyweight in boxing and the super heavyweight, yeah, I think that's unfair, and that's an abuse of the term non-discrimination. And why I think that in a second step we could even think about not admitting to markets profit-oriented banks, because that's not their purpose. And we find it already in constitutions that tell us something precisely about the monetary and credit system, and they say the purpose is the creation of use values, something that we can eat or wear or, or live in, but not the creation of more money. So a loan to increase assets or money would be anti-constitutional if we take this serious. And this is just my last argument, that in a true economy, maybe all banks would even be common good oriented and not profit oriented. Thank you.
Thank you very much.